Hey, what's up everyone? My name is Ntombela and welcome to my financial education channel. In today's video, we'll be discussing the difference between investing in the stock market versus investing in real estate, right? Some of the advantages and disadvantages of investing in both and just things to consider, I guess, when you are investing. Just to put this disclaimer clear so that there is no confusion, this is not any form of financial advice. It seems like the FSCA is coming for people these days. So please guys, this video really is just my opinion, and it's in no form trying to tell you what to do with your money, where to invest your money. That decision basically lies on you. I'm just trying to share my experiences, things I've read in books, and things that my mentors have taught me. Right. Before we get started, please like the video, please subscribe to my channel, guys. I know it's been a while since I've posted a video where I've made a video specifically for you, but I am back. I've just been a bit busy, but I am back. I'm back with the lives. I'm back with making videos and creating content every single week just for you, right? So investing in the stock market, let's break it down. What is a share? A share is basically a portion of a company, and when you purchase a share, you become part owner of the company. So let's say, for example, Apple, since Apple is listed on the New York Stock Exchange, you can actually get onto a platform where you are going to purchase a share. A platform such as Easy Equities or Webull, for example. I think I really like Webull because they don't charge any commission. However, it is a US-based company, and Easy Equities is a South African-based company. They do charge you commission though. But that's not what the video is about. It's basically trying to tell you that purchasing shares is very easy, and you can even purchase a fraction of a share. So Apple's share price, I'm not sure what it is right now because they just did that split of their share price, but yeah, their share price, let's say it's $200, or there's a share, the South African market that you want to purchase that is 2,000 rands. You don't necessarily have to have $200 or 2,000 rands to purchase the share. You can purchase a portion of that share. So a share basically is a portion of a company, and then you can also purchase a portion of the portion of the company, which is when you purchase a portion of the share, right? So you can invest, let's say you have $100, 200 rand, you can really invest in shares. You don't necessarily have to purchase an entire share for you to qualify to purchase shares on the stock market. So that's what a share is. And what are the benefits of being a shareholder? You benefit from capital appreciation. So this is when the share price goes up. If you notice over the past 3 months, let's say, Tesla and Apple and Amazon and all these tech companies have been significantly increasing in price, which means that if you purchased your shares, let's say for $200, your $200 or 2,000 rands at the moment could potentially be 3,000 rands, 4,000 rand, 5,000 rand, depending on how much the share price has increased. And it also works the other way around. So if the share price dips, you also lose money. So your 2,000 rands, your $200, 20,000 rands, whatever amount that you've decided to invest in, that amount also will basically shrink. So if you do cash out when the share price has gone down, you in essence have locked in your losses, and you put in 20,000 rands and you're pulling out 10,000 rands. This is when now the share price is going down, and this could be due to many different factors that are affecting the company itself, that are affecting the environment in which the company is operating in, the industry, or just the economic conditions of the country in which they are operating in. This pandemic has made it clear that share prices are fluctuating, and they are able to increase and double in 3 months. And they can also really decrease and go down 95% in a matter of days. If we look at, what is it, RMB share price recently went down like 95%. The past like month or so, I think it happened over a period of 2 days where the share price just plummeted like 95%. So if you had, let's say, 100 rand there, your 100 rand is now basically 5 rand. But then if you make a good investment at the same time and you purchase a share that is probably going to increase in value over time, as I mentioned before, that share price could double, which means you'll double your money. And also this will happen over time. So generally, good companies such as Coca-Cola, such as Ford, these are companies that grow gradually over time, and relatively decent companies to invest your money for the long term. What also happens is that when you are a shareholder, you receive dividends. So companies pay out dividends on a quarterly basis, some pay out on a biannual basis, and some pay out on an annual basis. And not every single company pays out a dividend, right? So companies such as Apple, they do pay out a dividend, but they pay out a really small dividend. Companies such as Tesla, they do not pay out any dividend at all, no matter how much profits they have, because they are reinvesting their profits into building their business and growing the business. So it's generally companies that are more mature that do pay out dividends, because their growth is not really going to be as significant as a new company. So that's some of the things that are looked at. So companies that are REITs as well, they regularly pay out dividends all the time. If I'm not mistaken, don't quote me, I think it's required by legislation for them to pay out a dividend to their shareholders. I'm not sure how often, but I think they do have to pay out regularly, at least annually, a dividend to their shareholders. But I do know that some of them also recently postponed their dividend due to the pandemic that we are currently experiencing. So that's what investing in the stock market is. You can benefit from capital appreciation, you can benefit from dividend income as well. And then what's also nice about investing in the stock markets is that you only actually get taxed when you sell your shares. So you don't get taxed on the capital appreciation. You only get taxed when you sell that, and then you'll get taxed on the capital gain that you have made. And then on the dividend side, the dividend income is actually tax exempt for individuals, so you basically don't pay tax on that. However, there is dividend tax that is paid by the company. But that's a story for another day. I'm not a tax practitioner either. I just happen to I do know some things about tax, right? So let's move on to real estate investing. When you're investing in real estate, basically you're investing in a house or a building, but let's stick to residential right now. Looking at a house, when you're investing in a house, what is the benefit of doing that? You also benefit from the same thing, capital appreciation, which is not a guarantee, just like how it's not a guarantee for investing in stock markets. But generally, property does increase over value. We do see that happen, right? So property will generally increase in value. And also another benefit of it is that if it is an investment, then you will be benefiting from the rental income that you'll be receiving on a monthly basis. Assuming that you're making a profit on a monthly basis, let's say 1,000 rands profits on a monthly. I don't think there's much I need to really go into detail in regards to the property investing. We all understand property, that it goes up in value, that you receive rental income. There's many challenges as well that are faced when you are investing in real estate as compared to investing in the stock market. So that's another thing. When you're investing in real estate, there's a lot of tenancy problems that you might face. Tenants not paying you, finding a tenant, managing the property, fixing any damage, repairs and maintenance of the property. There's a bit of a headache and work that needs to be done when you are investing in real estate as compared to investing in the stock market. You could, in essence, just put your money there and fall asleep and really forget about it, and then maybe check on it once a week. That's sometimes what I do even. Check on my shares like once a week. So it doesn't really require a lot of time, doesn't require effort. You'll never hear Jeff Bezos calling you in saying there's a problem, unlike with tenants, where if there is a problem with anything, they're going to be ringing you up. Unless you have a property manager in place, then they won't be ringing you up, they'll be ringing up the property manager. Another thing with comparing the two different types of investments is that when you're investing in real estate, your money is really stuck. So you're not really liquid, because selling your house so that you can get the cash is not a process that happens like this. It's a process that can take 3 to 6 months to a year, depending firstly on if you price the property right and if it's advertised correctly and if you can sell quickly. And then once that is established, then you also have to get the money actually into your bank account, which doesn't happen the day after you sign the offer to purchase. However, with investing in the stock market, you can relatively get your money really quickly. You can get it within 24 hours in some case, if you do need it immediately, right? And it relatively is easy to get started to invest in the stock market, because as I mentioned before, you can invest like 100 rand a month, and it's not like property where purchasing a property, you'd have to qualify with the bank, or you'd have to have some sort of investor funding you, or you'd have to have the physical cash on your possession, some sort of inheritance, or something that is gonna give you this lump sum of money so that you can get started with investing in property. However, there are different strategies, obviously, of getting started in property without having a lot of money, which is what I teach in my course as well. That I recently started my coaching course that I made public, but however, it is now closed. So there were a lot of people who were interested in knowing about my coaching course. It's basically me explaining to people how they can get started in property without having a lot of money, which is exactly how I started. So I've started the coaching course, and my students are really working hard at it right now, and we're going to see success, and I'll be sharing the success stories with you guys as well. My coaching course is closed, however, unfortunately. So if you are interested in it, it's something that you'd have to wait for. Maybe I'll open again sometime at the end of the year, maybe next year. I'm not really sure. But anyway, that's not what this video is about. So that's what the difference is between investing in the stock market and investing in real estate. I really enjoy real estate because I see it as a long-term investment for myself, and it's not something that someone can take away from you. And it's within your control. Like, real estate is really an asset that you can hold that is in your control, unlike with shares and owning a stock portfolio, where if Elon Musk decides to tweet something stupid, then the share price goes down, right? If there's any fraud or anything shady happening in that company, the share price can dip as well, which is going to affect you and could potentially affect your dividends as well if that company starts making a loss. We've seen clearly right now with what Clicks has done. If you've invested your money in Clicks, what do you think is going to happen to your share price when they start losing money because of that racist ad that they just posted out, right? So it clearly shows that it's outside of your control. However, it has the benefits of ease of entry, and also you don't have the headache. With real estate, you have the headache. It's a bit more active, but the profits are also there. You can build in strategies in your property portfolio that is going to maximize the amount of profits that you are making. So that's the difference between the two. I hope this video has really helped you, and I hope to start making more videos more consistently, because I have been away for a bit. But do share the video, do like the video, and subscribe to my YouTube channel. Hit me up in the comments below if you are interested in investing in property, investing in the stock market, or if you have any questions or suggestions for any other videos that you'd like me to make, please hit me up in the comments below, and I will see you guys on my next video. Cheers.